Welcome back. I'm Pratap here. Today is the 4th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. We are conducting a poll at our Telegram channel. So I request all of you participate in that poll. And this poll is about understanding your requirements from the services provided by the NeoStock. So based on your requirements, I will plan my training schedules and also the generation of different reports. So this is the reason why I request you participate in that poll without any fail. In case if you are not yet joined at our Telegram group, please join. I provided a link to our Telegram channel in this YouTube video description. So there you click the Telegram link and join in the Telegram group. And also another announcement, please. This is your first visit to our channel. Please understand we are providing complete free training on supply demand zone price action. And you can access all the training videos from our YouTube channel's playlist supply demand zone price action course. In this playlist, all the training videos are available. I'm also providing the link to this playlist in this YouTube video description. Even if you click the link, you will get into this page and then scroll down to the bottom of the page. And here, starting from lesson 1.1, you will be able to access all the training lessons in an order. So please go through all these lessons and strengthen your skills related to supply demand zone price action. Now let us get into the evaluation of high liquidity zones. Even yesterday, I have published a video on Nifty 50 and Nifty Bank Nifty supply demand zone chain. In that, by using that supply demand zone chain and high liquidity zones, we identified Nifty's support and resistance levels based on different time frames. So the immediate available high liquidity zone is a 5 minutes high liquidity demand zone. And today prices reached here and it gave an entry, and then see how the prices are pushed until its next 15 minutes zone. This is a 5 minute zone and also a 15 minute zone. Let me shift to 15 minutes time frame. See here, you have a 15 minute zone, rally base drop, and within this area again fine tune to 5 minutes to find the exact order flow, and prices reach to this level. So Bank Nifty has given 280 points move from this high liquidity 5 minutes high liquidity demand zone. Those who have taken a trade in this zone, you would have got a good profit in today's intraday session. This is from Nifty and Bank Nifty chain video we released yesterday. Now let us look into the high liquidity zones generated in our yesterday's report. We have identified 4 high liquidity zones from our yesterday's report. Out of these 4, one trade got executed and gave a good profit. That is ABFRL. ABFRL is a 75 minutes high liquidity zone. We have a rally candle, 2 base candles and drop candle. And today prices entered into this zone. And this 75 minutes is fine tuned to 15 minutes level. Let me show you the 15 minute zone. Here we have a rally base drop. This is at the distal line. This zone is at the distal line of the 75 minute zone. Several times I told you, at the distal line, if there is any zone, a little above there could be a trap also will be there. Because this is a supply zone, you will be seeing a bull trap just a little above that. Most of the times, those traps work very well. So that's why you should identify the trap also. But before that, let us see how we fine tune the 5 minutes area inside the 15 minutes. So we have a rally candle, 3 base candles and a drop candle, and then follow through candles. Okay, this leg out is not very great, but okay, because we have follow through candles at lower time frame, it can be acceptable. At 15 minutes and 5 minutes, if follow through candles are there, we can accept this zone. Moreover, this is a fine tuned zone inside this 15 minutes area. And if you look a little above that, you also see a zone rally based drop. See, this drop is not really great. So that is the reason why actually we compromised and we drawn. The reason is lot of order flow is coming from here. This is the area where the order flow is coming. Even the zone also created from this order flow only. That means this is the key area. Probably a strong order flow will be there. In case if this 5 minutes fine-tuned zone is failed, the orders will be picked up from here. That's why you have to combine both these zones, both these areas. But what I did is, because this is not a strong leg out, according to my understanding, inside this area, 5 minutes area, there is a 1 minute zone will be there. There you can find the real order flow. Actually, the zone I have drawn is 1 minute zone. If I am supposed to write 5 minute zone, say till the higher wick of this zone I have to draw. But why I didn't draw? Because because this leg out is not great. Still you can accept. Sometimes you can draw compromised zones you can draw. That is based on your experience. Instead, let us confirm whether real order flow is there or not. If it is not there, drawing a zone with some compromise is not really good. So that is the reason why what I did, I went to 1 minute time frame. And within this 1 minute time frame, you see a real zone here. We have a drop candle, 1, 2, 3, 4 base candles, and again a drop candle. So this is an excellent candle. See the real order flow, how it is pushing from here. All the orders are picked up from this 1 minute area. So the real institutional order flow is within this 1 minute area. That is what we should understand. You may ask a question within this fine-tuned 5 minutes area. Will there be? You may ask a question. There is no order flow. Yes, there will be an order flow even here. See, institutions created multiple order flows. See here inside you can find a zone. You have a rally, base, drop. There is a zone here. Rally candle, base candle, and a drop candle, and then follow through candles, and a very big move from here. Actually, these are the original order flows from where institutions place their real orders. And from here we will pick up the orders next time when prices retrace into this area. This is the area. Once this is broken, then it will pick up the orders from the next 1 minute. This is the next 1 minute. See, inside 5 minutes, we have a 1 minute zone. Again, a little above this 1 minute, actually it is slightly overlapped. You have to understand this is a zone confluence. This 5 minute zone, this 1 minute zone are overlapped, it is a zone confluence. So then how to plan our trade? Because there is a zone confluence between this 5 minutes area and 1 minute area, what you can do, you can combine both these zones into one zone. For your better understanding, let me delete this entire zone. Let me keep only this 5 minute zone and 1 minute zone. Then how to plan your trade? When you have both the zones are overlapped, probably the one above one will act as a trap, bull trap. Then how to plan the trade? You have to plan the trade in such a way, this is going to be your proximal line, and the distal line is the 1 minute supply zone. Both you have to combine. When you combine both, our risk is not going to increase? Slightly it will increase because this is a small area. If you combine both these two zones, your risk is within the 1.3% level only. We can accept risk of maximum up to 2%. So the maximum risk, if you combine these two, it is only 1.3%. So nothing wrong. And anyway, our targets are going to be the 15 minutes level zones. You will be having a very good reward also, no issues. And this is a small zone. If you get into 5 minutes, you will understand. think from the look this. Please look into the zone from 5 minutes. See, it's a very small zone now. 1 minute level, it looks like a big one. And what happened today? Let me show you. This is the zone. Today prices moved up and gave an entry in this zone. In the first 9:15 minutes candle, you got an entry. Again, you got second entry. After that, prices were down to some extent, but they didn't reach our target. This is our 15 minutes target. Maybe up to here, it has given around 3% ROA it has given. Maybe 3 or 3.5% ROA it has given. But we are looking for 15 minutes target. But what happened from here today? Demand is also very strong demand. So again one more entry here, another trade. Still again pushed because there are pending orders, strong pending orders are there. Again it pushed. But the push is not good enough. The reason is today's demand is very strong. That could be one reason. And again, third attempt it got. If you missed these two entries, definitely you would have taken this. 10 o'clock again, third entry gave. It went a little deep. Even now it picked up the orders from this 1 minute area. From this 1 minute area, it picked up the orders. It went a little deep inside this 1 minute. It didn't violate. It went a deep inside close to the distal line. But this is the entire thing is our zone. And after that you see what happened? Here the real order, because this here, it consumed the entire demand now. Because it consumed the entire demand, now prices were moving down, and finally reached the target at 11 o'clock, 55 minutes. When is the third entry we got? At 10 o'clock we got. So within 2 hours, the trade is closed. Those who have taken the trade at the first candle, probably you have waited for a little longer. Because the 9:15 candle you got the entry, or second entry you got at 9:40. Even if you consider 9:15, so it's about 2.5 hours, more than 2.5 hours. A little over 2.5 hours, you would have waited. So finally it reached the target. After that, the zone is violated and went further down. But this is our immediate 15 minutes target. Let me get into the 15 minutes time frame. So here we have a drop, 3 base candles, and we have a rally candle. And finally, this is the one actually pushed the prices down. And this is the way ABFRL we got a profit 9,490 rupees profit, which is 7.5% ROI we got. So excellent trade. This is the only one stock we got the trade out of these 4. Remaining stocks we didn't get, but for our learning point of view, let me show you how I fine-tuned. Maybe again in future, you may get this trade. At the time, whatever you are learning, it will be helpful to you. Because many times it happens. The time when we fine-tune the zone, you won't get the trade, and after that you will get the trade. One is VEDL, Vedanta. So this is the one. And Vedanta we already fine-tuned previously also. Previously I remember once we got a trade in Vedanta. Maybe this is the one if I am not wrong. Probably around 13th February we need to verify. Today we didn't get a trade in Vedanta. But a few days back, 29th February, prices entered into this fine-tuned area and started moving up from here, from this high liquidity zone. See, inside we have fine-tuned 5-minute zone that is again acting like a high liquidity zone. Exactly from there, orders are picked up, second time, again third time. So this 5-minute zone is not able to violate. So prices are not breaking this zone. Maybe it is acting as a high liquidity zone. So this is a daily zone. This daily zone again we fine-tuned with 75 minutes. Previously, once we discussed this. Because I didn't draw this zone today. I mean, yesterday after the generation, I didn't draw this zone. The time when I opened this chart, already these zones are available. That means I have drawn this earlier. Maybe we would have discussed this Vedanta earlier, but maybe we don't know. It could be long back, maybe a month back. If you would have missed how we analyzed, please listen now again. So inside again we identified two 75-minute zones. This is a rally, base, rally, and another one is this is the one. We have a drop, two base candles, and a rally candle. So within these zones, again we fine tune to 15 minutes time frame. These 75-minute zones. So here we have one 15-minute zone, rally, base, rally. And again here we have one more 15-minute zone, drop, base, rally. And this 15 minutes is acting like a high liquidity zone. Again inside we drawn 5 minutes, that is also acting like a high liquidity zone. So let me go to 5 minutes time frame and show you. So inside this bottom 15 minutes, again we have ERC candle, base candle, rally candle. So this is a 5 minutes demand zone. And this is another 5 minutes demand zone. Inside 15, drop, base, rally. Drop, base, rally. See here we got the first test. And this is the test, second one. And again this is the third one. And immediately fourth one. And recently fifth one. From here the move has started and moving up. This is on 29th February and today is 4th February. See how much it has given already. And what is the price here? 261 rupees. So 15 rupees profit it has given already. So more than 5% return. So maybe around close to 6% return it has given. 29th Thursday. We got that this trade, this high liquidity trade, but maybe our software did not detect near the zone. Maybe by the time price already entered into this zone. That could be the reason. But it worked. 29th and Friday, second trading day. Saturday was a trading day, special trading. 3 and today 4th. In 4 trading days, it has given more than 6% return. And this is 6% is not in F&O. This is cash trades. F&O it could have been into 4 times or 5 times. Maybe close to 25% return you would have got if it is F&O trade on your capital. Because you will be having 4 to 5 times margin will be there. So that you have to multiply with that margin number of times. So anyway, this is how we fine tune. If this zone is violated, the next one will pick up. This is a fresh zone, the one below the whatever we have drawn. And this is about VEDL Vedanta. And the next one is AU Bank. Yesterday I told you, don't consider this chart because I shown you in our yesterday's video. This is daily chart, but when it comes to intraday data, that is 75 minutes, prices came from here and then came down. That means this zone is violated. That is what I said. I didn't understand why it happened. Maybe there could be a false order that would not have been captured here. That is what I thought, but actually that is wrong. It seems there is a data issue in trading view. That's why Price opened from here, we got a very drop candle. And it seems they corrected, now the problem is gone. Now look into the 75 minutes chart. Yesterday when you looked into the 75, the recorded video, you please look into that. The prices came here, somewhere here it opened and then came down. It looks like the zone was violated. But daily chart is normal. That's why I surprised, but anyway we don't want to take risk. That's why I told you not to take any trade. But because trading view is corrected, now data is looking very clear. This zone is not violated. Definitely we can plan a trade. But today prices did not enter into this zone. Still the prices are very near. Maybe in today evening, whatever the prices, stocks near demand and supply zones, probably once again this is going to be listed. So if it is listed, if our software again once again lists this stock, if tomorrow prices enter into this fine-tuned area, you can plan a trade. How I fine-tuned, I already explained 2 days back or 3 days back in the video, in our analysis video. I don't think I again need to repeat this. If anybody wants to refer, please go back the previous some 2 or 3 analysis videos, high liquidity analysis. One of the videos you will identify how we fine-tuned. I already explained. Now let me move on to the next stock, RBL Bank. This is also a 75 minutes high liquidity zone. No, this is a daily, it seems. Daily high liquidity zone. Yeah. This is a very old stock. Old means in the year 2020, February 2020. Because we didn't have February 2020, the zone we have drawn above, we didn't fine-tune this zone at 5 minutes level and 15 minutes level, because the trading view data is available for 5 minutes only last 1 year. And 15 minutes data is available only for the last 3 years. This is a 2020 zone. Trading view is not showing you 15. Without data, you cannot fine-tune. Maybe we can take the help of our NeoStock's supply demand zone chain option. We can trace the trades. But time being, why I am not really concentrating is in the recent price action, new zones are created here. Here new zones are created, rally, base candles and drop. This is 75 minutes level. Sorry, I am at daily. Let me go to 75 minutes. We have a rally, 4 base candles and a drop candle. And again here also a leg-in candle. This is leg-in is ERC candle, failed ERC, 3 base candles and a drop candle. This is the way we have drawn recently. And moreover, this is a fresh zone. This is fine-tuned. I already explained this, because previously once we got this stock near this supply zone. At the time our software has identified this stock. So at the time we fine-tuned this 75 minutes with 15 minutes area. I already explained, maybe a little older video, you have to check this. But let me show you once again. The 15 minutes time frame. We have a rally, 2 base candles and a drop candle. And this zone we didn't consider. Below there is one more drop, base, drop, but see the number of candles, 1, 2, 3, 4, 5, 6. 6 candles are there, but when we look into 5 minutes, more candles are here. But the above rally, 2 base candles and drop in 15 minutes time frame. Now go to 5 minutes. I didn't mark the 5 minutes for the below. See the number of base candles here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, at least if you consider this as a drop. Or if this is also considered as a base, some more base candles. Anyway, this zone will be a lot of consolidation is there here at a 5 minutes level. I don't think this will hold the prices, but the one above, we have drop, base, drop, again we have rally, 3 base candles and drop. We have two zones. You can combine both these zones and you can plan the trade. At 15 minutes level you can plan, or 5 minutes level take an entry here, and the above the digital line you can plan your stop loss, both together. See, there will be some orders here even in this area, but they are weak. They will be violated easily. That is also an advantage for us, because this supply zone will consume some demand. Maybe it is not good enough to stop, but it will consume. By the time prices enter here, the remaining demand will be consumed by the supply zone, and then the pending orders will push the price down. This is how we plan. And moreover, LOTL is there, more strong order flow will be there. Both the zones together, because we are combining both the zones together, a single zone, and planning the trade, because these are all the LOTL zones. And risk is also minimal, no issues, because they are all small 5-minute zones. But anyway, prices entered into the zone but didn't reach up to our fine-tuned area. That's why we didn't get the trade. Price entered inside the zone and then came down. So this is about the high liquidity zone generated in our previous report. Hope this analysis part will be helpful to you for your learning purpose. Let us all meet again in our next video. Thank you.